Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the unexpected revision upwards to the China virus data has markets stepping back and reassessing their views. But first, inflation is rising in the US, now up to 2.5% in the year to January, with core inflation up to 2.3%. Today's CPI rise was driven by petrol, which is up almost 13%, rent up 3.3%, and medical care up 5.1%. And these price rises are wiping out all the rising wage gains the Americans are fond of talking about. And the American budget deficit is inflating fast too. For the year to January, the federal budget deficit rose to $1.06 trillion, and borrowing rose even faster to $1.1 trillion for the past year. Both were worse than the December result by some margin, and both exceeded the deficits the previous administration left by an 80% larger deficit and a 60% higher borrowing level. And that is quite remarkable because the prior administration had to deal with the GFC, and this one was gifted a rising economy. Across the Atlantic, the UK is also about to go into a major deficit spending spree without matching tax income. In China, there was a huge revision into the number of COVID-19 virus infections, up from 45,200 previously to now 60,400. And the death toll has also been revised higher from 1,115 to now 1,370. And the risks to their economy are magnifying. Even before the emergency, trade was going off the boil. Preliminary data shows that car sales tumbled 18% in January from the year earlier and are expected to drop a further 30% in February. Meanwhile, sales of electric cars plunged more than 50% in January and down for the 7th consecutive month. The virus emergency is pushing Chinese commerce even more firmly online, and that will have a lasting impact. Housing sales are taking a back seat, and developer stress will become extreme soon with large financial consequences. One will be for the New Zealand log trade. The US Treasury 10-year yield is now just on 1.61% and similar to this time yesterday. Gold has risen again today, up another $7 to $1,577 an ounce. And US oil prices have made another small gain today and are just over $51.50 a barrel. The Brent benchmark has also firmed to just under $56.50 a barrel. But demand for oil is now expected to shrink for the first time in more than 10 years as the economic impact of the Chinese virus spreads. The Kiwi dollar will start today softer at just on 64.4 US cents. On the cross rates, we've also dipped to 95.7 Australian cents, and against the euro, we're unchanged at 59.4 euro cents. That has weighed on our trade-weighted index down to 70.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.